Good day to everyone. This is Venture Investors Economic Focus by InnMind, and we continue our series of interviews with venture investors about the situation all the world is facing now. I mean coronavirus, pandemic, and the global crash on the markets, international oil prices crash, and of course stock markets crash. So today our guest is Vitaly Golomb. Vitaly is international venture entrepreneur and managing partner at GS Global, which is a venture capital firm based in San Francisco, California. Hello, Vitaly.
Hi, thanks for having me.
Thank you for your time. And my first question is, what are you thinking of the situation with the global stock markets crash? How long it will take to recover and how it will affect the business environment?
So GS Capital, we primarily deal with, we're an investment bank and we primarily deal with private companies in certain sectors, but we work with a lot of corporate venture investors, and certainly that's a big problem with liquidity. The first thing that gets cut is anything that gets spent from the balance sheet. All the balance sheets are going to suffer for many of these companies. Public companies that don't have a strong balance sheet, that don't have enough cash to operate through this environment, are going to be under a tremendous amount of stress, and many of them will go bankrupt without a doubt. There have been many companies that have been spoiled over the last decade to be over leveraged in a lot of ways, to borrow a lot of money, not have a lot of cash, and think that it's always going to be there. A lot of them are in for a very rude surprise, and the stock market, of course, is a bit exacerbated in part because we have algorithmic trading. So a lot of the triggers are getting triggered with all of these falling prices. So the faster things fall, the more acceleration we see in that. At some point we will hit bottom and things will start climbing back out, but it's going to be an uneven recovery because some businesses are much more core and much more necessary than others. Obviously, travel industry, leisure, hospitality, that's going to suffer greatly. A lot of countries that are depending on that primarily as their main industries are going to suffer greatly. So it's going to be a very uneven recovery. The interesting thing is to see China already start coming back about 60 to 90 days, depending on how you count into this. And they will recover well, all things considered. Manufacturers coming back online, and they will be in their first recession in a very long time, but other countries are going to be in a much worse recession. US has much more capacity to respond to a crisis like this. This is when the massive US military goes into effect. Just before we got online here to talk, there was an announcement that the Pentagon, the US military, is starting to activate its wartime medical facilities and capabilities to be able to supplement the healthcare industry that's really getting overwhelmed. So the virus itself is obviously a problem, especially for high-risk people, but we're talking about the main problem being overwhelming the capacity of the healthcare system. So US will be okay, US will recover. Other countries, I'm really, really afraid for, that don't have the capacity. And we're seeing already what's happening in Italy. That's been a big lesson for everybody.
Mm-hmm. And a lot of global consultancy companies, they say that the major problem will be in the European Union, in Japan, and in a few other countries. What countries you consider to suffer more of this?
I think a lot of the global consulting companies are going to become experts in debt restructuring, just like they were in 2009, 2010. I think that's going to be a heavy load. Europe, Europe, this is where it helps to be a little bit conservative. So I think the big industries in Europe are not as over leveraged. If you look at some companies in US, my favorite example is always Tesla. That was the canary in the coal mine. When Tesla went parabolic with a few other speculative companies based on no attachment to reality, smartly their CFO raised about a quarter worth of cash, about $2 or $3 billion that they raised in a secondary offering. That gives them about a quarter, but they're, other than that, they're completely over leveraged. They have way too much debt. So any companies that look like that are going to be beat up pretty badly, even if they're in great industries. Now, The good news is that when we come back from this shock event, we're going to see certain industry get accelerated. So transition to electric vehicles, we fully expect to accelerate because people are just not going to restart and do the same stupid things as before. So they're going to rethink certain things in a new way. I think a lot of people are going to get used to working from home, and that's going to become much more popular. So I'm not afraid for any of the, I think Silicon Valley will do just fine because it's mostly software, it's mostly enterprise software and some consumer services. Obviously, things like Uber and Lyft are suffering right now because the demand is very low, but they really fall more into that kind of travel category, and that's temporary. Those things will happen. And then one thing that I saw circulating a meme around saying that the climate change or climate crisis has to get coronavirus as PR agent. So hopefully when we come out of this, as long as it takes, and we're looking at least into like mid-June at this point for Europe and US to turn the corner on this realistically, at least. I think we're going to come out and people are going to be a little bit more sober about what's important. And hopefully that will be the silver lining on this whole thing.
Yes, we have seen the CO2 emission in countries which were mostly affected by coronavirus for now is really low. Yeah. So at least some positive thing. But I heard that you mentioned we are not at the bottom yet on the stock markets. Is it true? So this is the question everyone is asking.
I don't have the answer, but I don't think it's bottom. I think at some point people are going to kind of give up and just sell out of fear, panic and fear. Maybe we're approaching it. I don't know. We've lost we went from 30,000 almost Dow to under 20,000 now. So we've erased the last 4 years of growth. Not sure if that's enough. I mean, when we start coming back again, it's not going to be even. Like the big brands, Amazon will do fine, Apple will do fine. Companies like that will do fine. Boeing is another company with a really bad balance sheet and compounding effects of having a crisis with all the cancellations before that might need to get bailed out, or somebody's going to come along and buy them and restructure the whole company. So it's going to be ugly. Does it have a longer ways to go? I mean, who knows? Maybe we have a 50% fall. Right now we have about a little over 30% drop from the peak, and that happened very, very fast, fastest ever. I think, can we get down to a 50% drop? Unlikely, but anything is possible at this point.
Mm-hmm. And how, on your opinion, it will affect the venture industry and the startups' perspectives for fundraising?
So there's a few different ways to look at it. So first of all, over the last decades, a third or more of the capital in the venture industry has come from corporates. And about 80% of that is off of balance sheets. 20% of that are dedicated, separated funds that are sitting in different vehicles. So 80% of the corporate venture will seize up, I think, quite heavily. It depends on how fast we get through this. But a lot of the companies that were investing this extra money they had on the balance sheet, all of a sudden that extra money is not going to be there. And they're going to need to do dire things, layoffs, etc. So that's a problem. Smaller investment funds that have committed capital that think that they're doing great are going to find out when they do capital calls that their LPs, especially if they have family offices, etc., are not going to deliver the capital. Much like happened in 2001, much like happened in 2008, 2009. Everybody's going to take a pause for about 6 months or maybe longer in this case, because it's not just one event. We're just in the beginning of it. Mm-hmm. So that's one factor. And then, but for the larger venture funds, the issue is that they are going to do just fine. And for them, they've been complaining about valuations for a long time. They know they have a lot of capital and they know when to make investments. And it's in periods like this when investments are done for the next generation, right? So all of the great companies of this wave, all the sharing economy generation companies like Uber, Lyft, Airbnb, etc. We'll see what happens to Airbnb. That's a separate story. But all of those companies were born in 2009, 2010 when everything was down. when valuations were down, where you can hire people, where people wanted to take a risk, especially consumer businesses. Consumers were willing to do something to save money, and go for something new. So there are going to be some opportunities. There are going to be some great companies that are built, that are founded in the next 12 months, or 12 to 24 months, that are next generation. And it's probably going to be something around, healthcare, population health, around automation, AI, around transportation. So we'll see some great companies form. So from perspective of entrepreneurs, I'll give them the same advice I got when I was fundraising in 2008 with my startup, way back when I had a first meeting with somebody I still am in touch with, Ben Smith. He had his own venture fund back then, and I wrote about him in my book. He said, you know what, nobody is interested in doing seed investments right now. They are all concerned about how not to lose their jets, the big VCs, and come back in 6 months. So I would say be prepared for that. There's certain sectors that, and companies that are ongoing, that are not seed stage, that are far enough along, that need capital. Expect at the very least valuations to come down, maybe a lot. But if it's a seed stage company, I think it's going to be very, very difficult to raise any kind of capital in this environment in the foreseeable future.
So for seed companies, it is better to use the next 6 months period in order to redefine their business model and to get more prepared for the fundraising when everyone will wake up.
Yes, there are many companies. Most of these companies, they don't have the luxury of being able to wait. The founders, they're not sitting there on personal wealth, or if they were, it was invested in the stock market, and they're going to feel a lot poorer. So many of these companies will not make it through to the end here. That's just a fact. The ones that will are the ones that are making changes very quickly, that are saving, cutting costs as much as fast as possible, cutting them to the bone, to where it hurts, to get into cockroach mode, what I call, and to be able to survive. Cockroaches can survive nuclear winter. Startups need to get into cockroach mode and get through this, and be able to compete for capital on the other side. The good news is that, if they're, of the 20% of the companies that survive this period, they're going to have a lot less competition when they go out to the market to raise capital. They can get smarter. People need to focus on bettering themselves, reading books, working on their business model, and trying to position themselves for the new environment. Everything is going to be different when we come out of this. The world is going to change, and they need to be ready for that.
How do you think, is there a risk that a lot of investors which were considering risky startup investors, for example, business angels, private ones, etc., they right now will switch to the speculative investments in the stock markets, because when it is down, it is very, very tempting to buy it out instead of investing in the startups?
There are probably two classes of angel investors. There are kind of hobbyists that are curious about tech investments, and they make angel investments, and they don't really think about it. They don't really have a strategy. It's just emotional. Obviously, those people are going to be quite volatile right now. They might be afraid of the stock market. Who knows? And then there are professional angel investors that are really treating it as a fund. They have a strategy. They have a thesis for their investments. Those will be much more stable with that kind of roadmap, and maybe they adjust expectations, they adjust their check size, they try to spread it out a little bit more, they go a little bit slower because they can, and a lot of these things will change in the behavior. But really, the professional angel investors, you can depend on them a little bit more. The hobbyist angel investors, I think, are going to go away. We had a board meeting of the Ukrainian Venture Capital Association, on which I've been for the last almost 4 years, this morning, and we discussed, the need for investors to show support for their existing portfolio companies right now to help them through this, and for to kind of provide confidence in the marketplace, and if they make commitments, to follow through on those commitments. Of course, everybody's going to do what they decide is the right thing for their business.
So in Ukrainian Venture Investment Association, everything is going on. They will not freeze or pause their activities.
Well, UVCA is we have about 60 members that are from angel investors to big venture funds that are interested in supporting and investing in the Ukrainian startup ecosystem. So, everybody makes decisions on their own. You have major corporates that are part of this. You have individual angel investors that are active in Ukraine. The problem is that no matter how good they want to be about this and supportive, there are macro conditions that they can't really control. Ukraine was the best performing currency against the dollar last year in the world. It grew by 15% or more. Well, it's falling just as fast. So that's the problem, is that you have with these developing economies, developing markets. When it's good, they grow fast. When it's bad, obviously that's when this term risk that everybody's been insulated against, that's when the risky part becomes really negative. So we will see what happens and goes in the next week or so, and that will be telling on what to expect. It's at some point things are going to be, people are going to get over the initial shock. I expect it's going to be in another week or two, and things will stabilize, at whatever level we're at. Things will be at least stable. We can maybe call bottom at that point, and then look for good news. And the good news will hopefully give us a very accelerated V-shaped recovery, depending on what that good news is. And maybe that's, vaccines that they started testing in Washington State yesterday, human trials. Maybe those will prove to be effective. Maybe it's some other breakthroughs in healthcare that are showing better ways to fight this bug, to make it less lethal and less contagious. So I'm keeping an eye on a kind of hour-to-hour basis on this crisis to see what good news we can pull out of this. And it's, hopefully people will get over the shock and start working and be productive.
Speaking about opportunities, what this new black swan, which we are looking at right now, what opportunities can it bring for startups from technological perspective? So you already mentioned that it is a good opportunity for smart mobilities, if I understood correctly, which will grow up after the crisis. But what other sectors can benefit from this?
Honestly, I think if your only tool is a hammer, everything looks like a nail. So certainly it's a little bit self-serving. I work heavily in mobility. We see that there's a lot of positivity because we are talking about transition to electric vehicles and autonomous vehicles. We think things like that already made sense are just going to accelerate as people come back. It doesn't make sense for factories to come back online and for somebody to talk about, doing internal combustion engines. It just doesn't make much sense anymore. And I think people are getting shocked into that. And I think also the good news is that, if there's any good news, is that people are starting to understand what a crisis is and start to feel it. And when somebody says climate crisis, which is going to be far, far worse than this, they understand what that means, and economically. And all of a sudden, billions of dollars in shifted business because you can't pollute the air anymore doesn't seem like a big deal. So you're going to see that positive movement. For startups, you really need to look at, kind of be honest with yourself, look in the mirror and think about what you're working on. Is it a nice to have, or is it something that's absolutely necessary and important and makes a big difference? And really focus your efforts in those directions, because A, those are the only things that will get funded in the short term. And B, if you're going to spend your non-refundable lifetime on something, it might as well be something that makes an impact, positive impact. So that's just my personal philosophy. Everybody is going to work on their own things, on digital tattoos and e-cigarettes and whatever they want. But I tend to focus on things that are kind of positive and make an impact, as well as are good investments.
Mm-hmm. As an investor yourself, you're not going to switch your investment focus to anything new due to this situation?
So I do some personal investment, but GS Capital, we're an investment bank. So our job is to help companies raise money. Our job is to help sell companies or sometimes represent large companies on the buy side to help them find companies to acquire. That's primarily what we do. So we are focused on helping our clients right now to get through a lot of the transactions we're in the middle of, and supporting companies that need our help in figuring out, we're the financial professionals. We can come in objectively look at a company's balance sheet, help them restructure the business so they don't go out of business, or better, they actually take advantage of this and are one of the strong ones that survive and thrive when the economy recovers. So that's our approach. That's how we look at it. For my personal investments, I fall into let's say the hobbyist category. So I'm definitely on pause and just focused on the primary business, which is all of this. My wife is an attorney, a corporate attorney, and she's also in firefighting mode to help her clients, figure out how to stay in business and not get sued too badly down the road with labor laws and everything else that's coming together.
Mm-hmm. Vitaly, the last question is, what you will recommend or advise to startup entrepreneurs to secure and maintain their business during this turbulent time?
Cut all expenses, as much as possible. Save money. Cash is king. You need to be able to survive this. You need cash. You need time. Time is money, and reduce your burn rate as much as possible. Collect, if you have customers, if you're at that stage and you have customers that owe you money, try to be aggressive collecting money, because some of your customers are not going to make it, and those accounts receivables are going to evaporate. So don't depend on that. If somebody's offering you an investment and it's not the best terms or something that you thought would be reasonable last week, change your mind. Cash is king. Again, do whatever it takes to build up your war chest right now, because we are in a war, and the only way you're going to get through this as a business is to have money in the bank to be able to keep operating.
Thank you, Vitaly, very much for your interview and your advice, and stay safe.
You too.
Thank you.
Thank you, Nelly.